Welcome to the Real Estate Show on KMED. Pete Belcastro and Joe Brett, the real estate guys, with you here today. We're both real estate brokers with John L. Scott in Southern Oregon, and we get together with you once a week here on KMED to talk about all sorts of real estate-related issues and topics. And glad you joined us here as the January rolling along here in 2018. My goodness. Always, of course, we're still in the frivolity mood, Joe and I are, because the holiday season extends, for 2 more weeks now to the Super Bowl.
3 more weeks.
2 more. Two more from today, right? Yeah. 2 weeks from today.
Weeks between the games, though.
I know, but 2 weeks from today, there's the Super Bowl, and it's over.
Perfect, yes.
Yeah, and our holiday season is over.
It's got to end sometime.
Anyway, welcome to the show today. Brad Bennington and Guy Giles are joining us today here on KMED. And, Guy Giles, he's our resident mortgage expert from Bank 34 Mortgage. See, how you doing? Nice to have you here.
I'm all right. I was thinking, actually, my celebration ended at the Alabama game, but I don't know. But I don't know. Everything's going great. We're just actually a whole bunch of refinances are going on right now. All of a sudden, historically, I'm just a purchase guy, and I've literally gotten 8 or 10 phone calls for refis in the last week. So
for refinances, and what's bringing that forward? You think?
Well, people have equity. I mean,
they have equity, yeah.
I think it was a little bit of pent up stuff. Everybody gets a little bit focused on the regular holidays like Christmas and Thanksgiving and all of that, and it inevitably every year right after New Year's, all of a sudden you start getting phone calls. People are thinking about their finances, how they're going to restructure for next year, and it's still a good mortgage, deduction for your taxes. So people like to have that debt rather than something else.
You used to tell people if I remember right, when you wanted to do a refinance, it was because the interest rate was lower. Right, if you were like 1 or 2% points, you should refinance because that would give you a great advantage there. But today, that's not the same. It's not the same reason, then, right?
No, and a lot of times the rates aren't necessarily worse or better. Which you're right. A lot of people are just about the rate. But if you've been in your loan a long, long time, say you're getting closer to retirement and you want to have it fixed a little bit. And I'm not a big proponent of let's put you right back into another 30-year loan or something.
Right.
But if you were in something and you really didn't have a lot of equity, and now you could even go into a little bit of a shorter term, keep your payment about the same. Or even pay off a little bit of debt. There are some definite good reasons to still look at doing a refinance.
One of the wonderful advantages is home ownership is being able to tap into that equity and that little bit of wealth that otherwise you wouldn't have to make your situation better. And for a long time, people's hands were tied in that respect. So credit to them for sticking it out. Now there's some opportunity out there to be able to maybe put yourself in a better situation because you have a little bit of capital at your disposal.
Yeah, well, that's certainly true.
Invest in your business, whatever you need to do,
I've got clients who bought a house in 2007, at the height of the market, and they've been in the house now 10 years, and they just now have seen the equity come back to what they paid for it, and so now it's time to move. Yeah. But they stayed longer in their houses, people have done, et cetera, et cetera.
I'm seeing a ton of move-up buyers also. That's another thing. They're selling their place and they're moving into something a little bit bigger or better and selling their house. So I think there's going to be a really strong, strong year.
Bless your clients in 2007 who bought, haven't they been on quite a ride? To get back to where they started.
Well, I think one of the big problems and things that you have to, a discussion that you have to have, certainly with the people you're dealing with there, is finding a replacement property and how do you sell your property contingent on a sale of another property and how you can go about doing that, because it's happening a lot and sometimes it doesn't work. Your sale doesn't sell, this one sells or it doesn't sell, and then we're having a lot of issues I hear as we talk about some more meetings in our offices about this type of issue. How do you do the contingent sale if you're going to move up? Is what Guy's saying. He's seeing a lot of that.
Yeah, there's a lot of planning that goes into it. I was reading some things this week about I don't want to get too far off base, but about mortgage insurance and how Fannie Mae and Freddie Mac now are allowing over 45% debt to income ratios for their loans. Not on everybody, but they will approve people. And now some of the mortgage insurance companies are giving a little bit of pushback. So that could be the next thing. So you could be in the middle of your transaction and all of a sudden March happens and your mortgage insurance company, say you have a little bit less than 20% down and you're getting mortgage insurance and it costs $120 a month. And then all of a sudden they throw a sliding scale in there, which there already is one, but it looks like they're going to scrutinize the higher ones a little bit worse. So I mean, how would that be to have your house in escrow, and all of a sudden you go to order that mortgage insurance on your new house that you're buying, and it went up $40-$50 a month, and now you don't qualify. So
that would not be. That would not be a pleasant experience to deal with.
That's not a conversation we want to have with our clients.
Just general for folks who are out there, Guy. What are interest rates? Kind of the various of what are you telling folks? What are you quoting people this last week on different rates?
Yeah, and I haven't actually pulled up a lot of government stuff in the last week, but speaking to the conventional stuff, we're in the low 4s now, and
the low 4s.
Yeah, and on I actually did a really big cash out refi on a. Well, it was just under the jumbo, so a conforming loan in the high 4s still. But this was a cash out refinance on a non-owner occupied property, so they are a lot better obviously on your primary residences.
Yeah.
But still, that's not a horrible rate historically. I remember giving out 6 and 6.5% on your primary resident, and then there's pricing hits for being a cash out for not owning the house, and to still be under 5%. Comfortably, not paying any points at that. It's, they're still really, really good. And, this economy is turning around, whether you're Democrat, Republican, whatever, it is a strong economy, and it's going to cause some inflation. It's going to cause rates to go up, but you have to look on the other side. The job market is very strong. The appreciation in your house that'll happen because of this economy is going to far outweigh, even if you lose 0.25%, there's a lot of people thinking that we'll probably be at around 4.5% by the end of the year on our just conventional loans. You're talking about a couple bucks a week, but what is going to happen on the other side if you sit this thing out? How much the appreciation's going up? I'd get
and
in
how
the
much
game.
it's going to cost you more next year? Remember
to get
in Jackson County in 2017, the average median price rose by 10.3%. So keep that in mind. In Josephine County last year, it rose 11.2%.
Unless your income and assets rose with that, your buying power is decreasing as those values go up.
Yeah. The interesting part of the whole thing, and Brad Bennington has been sitting patiently standing by, foaming at the mouth, ready to talk. And now we'll let him talk now, because if you look at the overall in both counties, in terms of new construction, Brad. First of all, it's nice to see you, by the way, and Happy New Year. We haven't seen you for a while yet, but you're looking good. Yeah. So just new construction in Jackson County, the median price went down 9% last year. How weird is that? Don't you think? What happened?
Right. So you're saying the median price of all construction
of new new construction,
but of all new construction.
All new construction in Jackson County went down.
Does that
$292,000?
Does that include MFRs?
Oh, now you're asking me something I don't know.
Yeah.
MFR. What is it? MFR. What's that?
Multifamily residential.
Oh, I would.
I think it probably does.
You think it does?
So
okay.
Yeah. So what you have
Which we
is
haven't built for quite a while.
Right. What you have is let's compare houses to cars for a minute, right? And so instead of people buying houses, they're buying cars. And you say, well, hey, people bought more cars this year, but the average cost went down. And the reason is because people bought a whole lot more Toyota Corollas than they bought Lexuses, right? But what we really need is, and everybody here has heard us get beat over the head with this for the last couple of years, is affordable housing. So if you look out on West Stewart, you'll see some MFR projects that are coming along pretty well. There are other MFR projects that are in the works, and of course, even though from a performance standard they're different than a home, they still get recorded as a home. But they're much more efficient from a cost perspective. The reality is that the cost of new homes, if you want to compare apples and apples, if you're going to build a mid-range 1,700 square foot home a year ago and build it again today, it's going to be more money to build the same home.
Yeah. Oh, absolutely.
The cost is not going down; it's going up.
Well, this is what we're trying to tell
We've
folks.
seen that
We've
seen that in our SFRs.
Okay, you guys
Single family
you guys are being really SFR.
Hey, there you go. Yeah,
multifamily units. If they're counting those, that would be kind of dumb to count those in new construction kinds of things, apartment complexes and things. But the affordable housing issue is still there. Well, whatever it is, there's still a lot of activity going on. I was showing clients up in the Shamrock, up Cali Vista, in that area of the Southeast Medford plan. It's just amazing how many homes are being built up there. As I was driving around, what really surprised me was there's basically nothing for sale in that entire area, hardly. There's just a couple places.
Yeah.
Which means that's a very desirable place, and people like living there, and that's why it's so
Snapping
popular.
them
That's why they're snapping them up.
Well, Pete, as you have said many times, and Joe as well, we're playing catch up.
Yeah.
From 2007 to 2011, we didn't build anything. I mean, I think there were I don't think there were 20 residential permits that were pulled in all of 2010 and 11.
Yeah.
So here we are in 2000. Now we're in 2018. For Pete's sake, we have all of these people that want to move to Southern Oregon, and some are mover-uppers. I'm really happy to hear a guy talking about people that are are just buying a nicer home because they can afford to.
Yeah.
But the reality is we have incredibly strong demand from people that are coming to our area, and we can't build fast enough to accommodate that demand. And that's going to be the truth for probably at least the next couple of years at least.
Well, it looks like about 343 units, according to the stats from last year, and that's nowhere near.
Nowhere near.
What we
Catch
need in
us
the
up.
overall picture. So let me ask Guy real quick then. If you're hearing what he's saying, and you're talking about people moving up, which is wanting a nicer place, are you loaning in new construction in some of these places, or is that because that's a good thing to move up to? I would think for a lot of people to go into a new place. If
Brand
you're
new,
gonna, my place, I want a new one. I mean, they're there. Is that right?
Well, it's just a super nice thing to be able to talk to somebody about, hey, you don't have to worry about a roof for 20, 30 years. You don't have to worry about a heating, air conditioning system.
Yeah.
All the things I've, replaced in my old house in the last couple of years. But yeah, I would say every month I'm closing, a couple of constructions, brand new constructions.
You are? Okay.
Yeah, and there's just not really a downside to doing that. I mean, I still think that there's, it's a good buy. And I walked into an old 40s house that they, little lipstick on a pig type one yesterday with a real estate agent, and I just can't imagine the work that has to go into that house. And then I look, anyway. It's just nice to have something new that you don't have to worry about dealing with.
Peace of mind.
And I'm seeing a lot of them. Yeah, absolutely. And people coming to town, they're buying the new ones too. So it's not
and
just
guys, you buy that brand new house, think of what's happening with our values and what the future looks to hold for our area, for the demand. You're going to get in and you're going to reap the benefits of your investment down the line. It looks pretty promising.
Yeah, last week we had the two, the Rogue Valley Association of Realtors president, Susan Krause, and Robin Simpson, who's the SOMLS president, were here, and we're talking about new constructions and the kinds of things that they're seeing. And the demand is certainly not slowing down. Brad, the builders that you talk to, that you see all the time, are they in the same boat? Are they going to continue to work? I mean, it hasn't been a delayed winter. Let's face it. I mean, we haven't had much weather-wise here. Boy, I hope we don't start talking about what might happen in the future. We need some rain and snow. But the demand, though, tell me what's happening with that, with your builders. Are they happy? What's going on?
Well, the builders are happy because they have so much demand. They have more demand than they can satisfy.
Keep up with.
Yeah, every builder's in the same boat. They've got more demand, but that brings its own challenges as well. And the other thing is, that we just went into a new code cycle as of January 1, 2018. We have something new to deal with that we've never had before. We have the governor writing energy code from her desk. So the governor has said, okay, you got, I've got some really great ideas for you guys to put into new construction. So you're going to do all this, all these ideas that she just thought of.
Well, she can't do that.
That may sound.
No, she can't do that.
That doesn't sound very nice, does it?
Okay,
But
she can't do that. Okay,
She's trying to save the world from Salem, Brad.
But the bottom line is
our expense.
our builders are operating at 100% capacity. They're nowhere near to keeping up with demand, and believe it or not, we are more concerned than anybody for affordable housing, and here's why. We want a nice, stable market. We don't. These peaks and valleys don't do anybody any good.
Okay.
What we want to do is we want to get to a nice market performance level, and then just kind of plus or minus, operate, plus or minus 5% in that market. We want a nice, stable market, and that's not what we've seen in the last several years. Just peaks and valleys,
right, up and down,
up and down, and we have so many really difficult issues to deal with right now. We've got, we've got pending material shortages because of all the damage repair we had.
Right.
We had over, I've heard anywhere from $400 to $500 billion of damages from the storms and fires in 2016, causing unprecedented demand on building material suppliers.
$500 billion. That's a huge number.
Yeah, I mean, just numbers that we've never seen before.
Right.
And we're still suffering with issues that we've talked about before with a shortage of skilled labor. We have a huge shortage of skilled labor that we're still struggling with. So all these things all get baked into the cake, and the reality is our builders they're grateful that there's a market for what they're doing, but nobody's really comfortable with this superheated market that we're in right now. We're all really looking at it very carefully.
Wow. And there's no solution. I mean, I don't know how you solve any of these things. I see.
Or how you stabilize it with the swings the market has had.
Yeah. What's discouraging is that it's going to delay and cost more.
Correct.
For new building.
Correct.
Materials, we're here. Have you felt that as well? We're going to see shortages there. Skilled labor, we talked about that. All adds up. It costs you more money in the end, and so that doesn't help anybody. The Real Estate Show here today continues here on KMED. We're talking with Brad Bennington, the CEO of the Builders Association of Southern Oregon, and Guy Giles from Bank 34 Mortgage. We are coming right back to KMED after this. The Real Estate Show continues here on KMED this weekend. Pete Belcastro and Joe Brett, the Real Estate Guys, with you. Don't forget, you can check out any of our past shows at realestateshoworegon.com. We have some terrific shows on the way, by the way, in the last few weeks. The RVAR, SOMLS presidents talk about market strategies. Rick Harris and Colin Milan were here. The former OAR presidents talking about the tax law and how that's affecting real estate and home ownership. Lots of good shows there that we hope that you'll go back on and take a listen to as well, right?
I was going to tell Guy and Brad before the show that we've had some really good shows. The bar's set pretty high, but so far I think they brought it that first segment.
And you know what? Brad is. He talks about policy. I mean, because he's the head of the Builders Association, and so. And you're on planning commissions and all those things that you're on. So you really are right on top of all these kinds of stuff that is out there regarding housing and building and construction. And it just drives you, I know, makes you crazy.
Pretty much.
It does. I mean, and I understand that. So anyway, you were talking before the break there about how, the governor changing laws, new things that went into effect in 2018.
Yep.
We're coming to is new construction is zero net energy. Everything's going to be all those kinds of things, correct?
Right. So what Guy said earlier about looking at a home as maybe kind of an investment, I would sort of agree with that. And the reality of that is that for the foreseeable future, as homes get more expensive to build, what that does is it makes the homes that are already created more valuable. Mm-hmm. So guys, right now, I'll give you an example. We built a home. The Builders Association built a home that we sold in 2015. Every once in a while, we'll build.
You guys build a home, right?
Yeah. And we use it to create money for some of our projects because we are a self-funding not-for-profit. We create all of the money that we operate on.
You earn it.
We earn it. We don't go around asking people to give us money. We earn it. So we built a house. We built a beautiful 1,600 square foot house in Eagle Point on a large lot. Beautiful landscaping, solid hardwood floors, beautiful cabinets with a view of Mount McLaughlin. We sold it in December of 2015 for $160 a square foot.
Okay.
$160 a square foot.
Quite a buy.
Not that way today.
I looked at a house for a family member last week. 800 square feet, 30 years old, $220 a square foot. And the realtor said that if this family member didn't want to buy it, that was okay. They had 6 other people that would buy it.
Well, it's in the price range that's in demand, and so you're seeing that. Okay, right.
Yeah. So in that sub 200 range.
Yeah.
So this is the economic power. As new housing becomes more expensive, it drags everything else in the wake, in the economic wake. Behind it, and that's what we're seeing. So it's so important for us as builders. Affordable housing is so important because we need this stair step that we used to have, where you had, affordable product for people that were just starting their lives, and typically people would move about every 4 years. So you have a young family. Joe gets married and starts a family, and 4 years later he buys a little bit nicer house. 4 years later he buys a little bit nicer house, and so on and so forth. What happened during the downturn was we lost 2 big steps right in the middle of that. So we had what was on the bottom, and then what was on, kind of above 2/3 of the way up. I don't know how we fix this, but this is what we need to fix to really bring affordable housing back to the street level where it will really help people.
And again, we hear from the state and the municipal level of the need for affordable housing, yet we put new restrictions and new requirements on new construction that makes it more expensive.
Yep.
And it's just, you got to see at some point that the two can't go together.
I forget who the fellow was we had a few months ago talking about, the private sector versus public sector in building housing. Remember that discussion we had? Well, you were here, Guy. Remember that, where the difference in cost of the private sector building these apartments?
That was Rob Justice.
Rob Justice, and what the difference of what we had experienced in downtown Medford with subsidized housing and the huge cost increases in that. So tell me, construction is easy to tax. Let's face that thing. What's the city of Medford? I mean, let's face it. Most of the new construction activity in Jackson County is taking place in Medford, right? I mean, a little bit in White City and Central Point, and that's about it. Illegal Point. You know what I mean, but most of it is there, right?
That's the big metro.
Okay, and so tell me about. The city of Medford. What are they trying to do? What do they want to do to into the housing world?
Well, we're encouraged to see what the city of Medford is doing. They applied to expand their urban growth boundary, and I think that's up at the Department of Lands. It's being reviewed by DLCD now, I believe, and I think what I hear is there's a good chance of that going through, and if and when that goes through, that's going to bring in about 4,500 acres of new land that that could be annexed and brought into Medford and used for.
And that land, you guys have been to those meetings. Isn't it mostly on the east side, up in the hills, and around the side, or northwest Medford, and around there?
It's all around.
It's all over the place. I'd say the largest
8 or 9 different parcels.
Yeah. The largest contiguous piece is on the east side, but there's little
pockets on the west side.
Little pockets.
All right.
But what we really need to do is have a discussion, and the city of Medford is willing to do this. I'm really encouraged by the leadership that we see in Medford with Brian Shotun and Kelly Matting, as far as trying to come up with some collaborative ways where, in light of what Joe said, they keep making new construction more laborious by all these rules and regulations.
Mostly at the state level.
And those are mostly at the state level.
Okay.
In the city of Medford, we see a willingness with them. It's like, what can we do to help you as builders create a more affordable product? And I'm hoping that discussion will yield some fruit.
Yeah, well, that would certainly be helpful, because the epicenter is going to be, housing is going to be in Medford.
Even downtown, the council is behind the plan to support where they've got their parking lots that they own. They want to build above those and provide some downtown residential opportunities, and they want to make that very affordable for that space to be available for developers to meet that need.
Okay, but why didn't they let Alan Sandler? He proposed to do that right down on Central.
They were way ahead of the game. That's exactly what we need down there.
It was too early for Medford to make a decision by that? Is that what you're saying?
Yep.
They couldn't make that decision. Now they're willing to do it.
Those 28 parking spaces dedicated to the residents really killed the deal.
Killed the deal.
Well, Pete, the reality is when we talk about affordable housing, our problem here in Southern Oregon is not that we have unaffordable housing. The problem is our housing is too affordable, just not to people that live here.
Too affordable, just not to...
Good point.
Right. Our problem is not that we have people that come here from other markets, and they're going, wow, this is great. Honey, break out the checkbook and write that man a down payment. And Guy sees that with a lot of the people that are, coming to him to buy homes. So the market, our market, for the people that live here, that's the problem.
Skewed. It skews our market for our local residents.
Guy Giles, you agree with that? You see that?
Oh man, yeah. I guess there's not anything more heartbreaking than having 2 young kids come in that are just, working just regular jobs, making a decent living, not a great living, but just looking at them in the eye and saying, hey, there's not really anything for you out there right now. And that is mostly what I see is people coming in, moving from out of the area, and I can't blame them. It's just not a great place down in California.
Well, it's a good mix.
So
do you know that nationally 40% of buyers are first-time home buyers? 40%. I don't know if that would be the same percentage in Jackson and Josephine counties as that is nationwide, but that's the nationwide total.
I would say maybe 10% of my clients, maybe.
You see.
Yeah, it's so rare now for just a first-time home buyer that it's almost a celebration in our office to watch them.
That supports your notion you just had.
You talked to us about a Chenoa fund. Is
Yeah,
that still there? That's a zero down payment.
We
kind
still
of thing?
have it. Yeah, I mean, you do take it a little bit in the rate, but it's it's really not a bad deal for somebody that doesn't have a down payment but may make a great living. So yeah, I can still do anywhere in town 100% financing.
100% financing there.
And yeah, and by the time you take in the lower rates for the FHA, it does make up for a little bit of that.
Mm-hmm.
But I actually got somebody approved for USDA today. Probably
Really?
the first
Wow.
one.
Oh,
Yeah.
wow. Jeez.
I know. And they just happened to hit right at the top of the income limits, and the house that they were looking at was right there. So I mean, it's rare, but that would be the other 100% financing option. But unless they really change their rules, I think at least the income guidelines, it's going to be difficult to do USDA around here. But we do have the Chenoa Fund, 100% financing for any income.
Remember when USDA loans kept the real estate market going? Because you couldn't get a loan on any other thing a few years ago, and now we're celebrating one again here. Look at that, just one. The Real Estate Show here on KMED. Pete and Joe, the real estate guys, Brad Bennington and Guy Giles. We're coming right back. Final segment right after this. We'll hear about the home show coming up next month. Real Estate Show rolls on here on KMED this weekend. Pete Belcastro and Joe Brett, the Real Estate Guys, with you. Don't forget, you can check out any of our past shows at realestateshoworegon.com. They're all there, along with lots of other good information from real estate. A lot of our statistics we talk about are always posted up there. You can go ahead and take a look at them. One thing about it, no matter what you say, real estate statistics don't lie, right? I mean, they're statistics.
Numbers are
You
big
can
part of our
interpret them- you
business.
can interpret them the way you
they
want,
tell us
but,
many things that we need to know.
I thought it was interesting when we talk about, how the rural landscape has changed so much over the last few years, from this huge demand, to where it's kind of leveled off, and now you're seeing cannabis farms, whole farms now up for sale. Which who would have thought that would have been that quickly? Yeah. They would start. Anyway, it makes the real estate market so dynamic that it's always changing. Whether it's in town, outside. I mean, listen to Dave with Brad Bennington of the home builders, of what is happening in building just in our area and the issues that builders face. You don't really realize that, and how difficult those are.
You and I may need to pick up the hammers, Pete, and the saws and pitch in.
I thought we were going to make it through a whole show without saying the word marijuana.
Almost.
Cannabis. Isn't it cannabis? Is a new word, huh?
You said it. Actually, he didn't.
Yeah.
Oh man. So I'm still seeing them. I think there's a bunch of excitement around there because a couple of loans got closed with some people that are regular W-2'd from some of these places. And anyway, there's a couple of them are able to buy houses now.
Well,
so.
and in searching, people looking at rural properties do not want to be next to grow sites with big, ugly fences and all sorts of things like that. So that's going to bring down the value of maybe your property.
There's a lot of people that live next to those that would like to move, but nobody's going to buy their place.
Anyway, it's interesting
frustrating.
As it goes and the market goes. Well, anyway, one of the big events each year is the Builders Association, the home show, right? And you got it coming up February 9, 10, and 11. So that's like less than a month away, right?
Yep.
At the Expo Park?
Yep.
Right?
At the Expo in Pinninger, it's the largest home show in Southern Oregon. It's the fourth largest home show in the state of Oregon. It's growing. We're having to allocate more space this year. And something else that's really cool and I'll let you guys know it here, is that we have been asked to, and we're going to do it. We are also going to run the Josephine County Home and Garden Show this year.
Really? Wow!
In April, yeah. So
in April.
So we're gonna go up there. We got invited to go and run that for them. So we're gonna go do that for them. But the home show, it's the one place once a year you can find anything and everything to do with your home and property. For people that can't afford to build a new home, anything and everything to do with remodeling, it's there. You can go. I think, Guy, you've got some remodeling access to remodeling money if people need to remodel.
Yeah. All I was thinking of, if you said we had access to everything, is with Kate Brown's new energy efficient house. I want them to show me how I can actually get that solar power to my house that's in the shade. So anyway, I'll be looking for somebody.
Brad brings up a good question. Now there are loans, right?
Yes.
For construction, remodeling loans, right? That you can add on, or construction loans, not construction loans, but remodeling loans.
There are a couple of them. You could do it just one straightforward way, where if you have enough equity in your house, you could just come in, do a refinance,
and you would do something like that. Okay.
Yeah. Or if you're purchasing a house, there's 203K loans, or Fannie Mae has a product. So there are definite options if you want to fix up your house a little bit, and that's actually not a bad thing. Head down to the home show, get some ideas for the place.
And,
go ahead.
And we've always, when we did our radio remotes for the
Shows
show
that,
out
yeah.
there, we always learned really cool things. We didn't know. People could talk to their refrigerators through their phones and turn their lights on and off. That was just a few years ago, and now that's commonplace. Do we have any robots this year? Do you know? I mean, those are hot new items in homes.
I can't give it away, but there will be products there that have to do with robotics. The answer to your question is yes. And smart home products are going to be there, smart home services.
I want to check that out.
The range of services and products has really, really grown a lot just in these last few years.
Because a few years ago, let's go back 2009, for example. Well, that's quite a few years ago now. But Tim, when we were doing those shows out there, I mean, there weren't a whole lot of. The vendor list had dropped. I mean, that kind of thing. You really started when you got involved with it down here at the bottom.
Yeah.
So you've seen it grow. So I guess my question is the vendors, the type of vendors that are out there now, is that what has brought this back, and there just so much of it now?
Three things. The first thing, and you've already talked about it, is this is really it's a consumer-driven deal. People need housing, they want housing, and this event is just 100%, housing and home and all of that. So it's consumer driven. The second thing is it's also driven by people in our industry, because this is one of the best ways for them to get their products and services in front of the market. We have a lot.
I have a great story for that.
We have a lot of vendors that come to our home show because it's the only event they do all year long.
Yeah.
They get enough business at our home show
out of that event.
Out of that event, it takes care of them.
My daughter-in-law.
I was going to say, listen to this story.
Elizabeth, my daughter-in-law, at the home show last year with her mini blinds company.
Yeah.
Booked 4 months solid worth of appointments, one after the other, and a waiting list even beyond that. At the end of the year, they had increased their sales by 100%. She did about $700,000 in sales, and the company went over $1 million. They just got honored and awarded some great things. There was a company in Basic Grants Pass that did $1 million in sales, and the catalyst was the home show and all the contacts that they made.
Wow.
And those people were really pleased and upgraded their homes. So it was a win-win for everybody
Wonderful.
involved.
Wow, what a great story.
Yeah.
It's the pent-up demand
that
we're seeing that's out there.
Improved economy,
improving your
equity in
house.
homes,
If you want to improve your house, we've sat here for 9 years talking about increasing the value of your property. You do that by going to these types of events and seeing what's there. You might like it in your house, and you could do these things.
And the third thing that's driving is really it's the vendors, and that's a combination of our venue and our service. People love coming to Southern Oregon. Now, 80% of the people that are in our home show are local people and local businesses. But we have people that drive us as far away from Portland to come down to our show just because they like the experience. They love the people. They love the show. So we've got great consumer demand, we've got contractor demand, and we've got vendors that just love to come and do the show.
February 9, 10, and 11.
Yes, sir.
We'll tell people about that as we get closer
Brad
to
makes
it.
popcorn and hot dogs and serves them up for you.
And coffee.
He's got his hand in everything.
Lots of coffee.
I love going to it. I love going to it. It's good. I love walking around, talking to vendors about what they're doing and their products and stuff. Okay, so we're almost out of time. So Guy Giles at Bank 34 Mortgage interest rates. You're busy. That's good. We like it when you are. Keeps you out of trouble. And the best part is that the demand is still there. It's not going away, I don't think.
I don't see it slowing down. It did a little bit around Christmas, but everybody's just going crazy again. So come in and get pre-qualified, actually pre-approved.
You have to be pre-approved. Don't go out and start looking. You can go out and look, but don't go make any offers unless you're pre-approved.
It's going to be look, but don't touch unless you're pre-approved.
Maybe unless you're in $1 million range, and then you might get a little leeway there. But that's about the only price range that might happen. Well, that's going to do it for the real estate show today here on KMED. Thanks to Brad Bennington.
Bye, guys.
Southern Oregon, the Builders Association of Southern Oregon.
Thank you, Pete.
New name.
Guy Giles from Bank 34 Mortgage. Joe as well. We'll talk to you next week here on the Real Estate Show. In the meantime, have a great week, everybody, and God bless you all. We'll see you next weekend here on the Real Estate Show.
You've been listening to The Real Estate Show on KMED Radio, presented by the Rogue Valley Association of Realtors, along with John L. Scott Real Estate of Southern Oregon and Bank 34 Mortgage. For guest contact information, download our free app, or to watch a past show, visit us online at realestateshoworegon.com. This show is produced by Table Rock Productions. Join us again next weekend for Southern Oregon's one and only Real Estate Show on KMED. And thank you for making the Real Estate Show part of your weekend.